JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the last trading day for November, so I hope you guys all got a good weekend to relax and you're all feeling nice and fresh today. So yep, as always guys, just before we jump into the charts, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. There's always a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So now then, jumping into the charts. Now the first one I want to pick up here is Nikkei 225, and we had a bit of a down day. I mean, if you can see that the Asian markets did reverse back down, the other equities, the European cash indices and the US cash indices also turned a little bit to the downside, but of course everything's still in a way under control here, under the bull control, because even, for example, looking at Nikkei, even though we had a bit of a decline here, what we could do is we can draw a short-term tentative upside line right here, and if this upside line continues to provide somehow support, then yep, a nice rebound here could be possible. But even then, given that this upside line is a bit of a tentative one, let's put it this way: if the price stays somewhere above this 26,000 mark, then yes, we could get a nice reversal here and a push higher. However, if the price suddenly drops below the 26,000 zone and stays below it, then, well, I mean, maybe we could go for a bit of a larger correction here to the downside. But for now, don't get me wrong, although we are seeing a bit of a move lower, still this could be seen as a temporary correction before another leg of buying. But if it starts dropping below the 26,000 territory, now that's where I'll start maybe considering slightly lower areas here on Nikkei. Shanghai Composite, now this one, look at this beautiful move. Now for a few weeks now I've been talking about this upper side here of this range near the 3,457 territory, and look at the beautiful move that we got here. The index did push higher this morning. Today, during the Asian session, it tested that area perfectly and reversed back down and ended the day in the red. So basically, in other words, this idea here that I had worked out nicely. So if you remember previously, when we had this decline, I said that keep your eyes on the 21-day EMA, because if suddenly that provides good support, then we could see a nice a push higher here towards this 3,457 territory. We got that, we did that, so now we can get rid of this upside this arrow here. And what I'm going to focus here right now, of course, I'm going to keep an eye on this barrier, this 3,457 territory, and in a way, if it continues to provide resistance, then of course the price could stay in this little range here for a while. But if it gets broken, then of course this would confirm a forthcoming higher high, and yep, higher levels could be met. But let's get to that point first. For now, I'm not going to rush into anything yet, because at the moment what I'm going to be keeping an eye on here is this 21-day EMA, because so far, like I said, it continues to act as a good support zone. But if it suddenly gets broken, then, well, I mean, we could maybe consider a bit of a move here towards this upside support line taken from the low of the 19th of March. And of course, then if that gets broken, then yep, it could open the door towards the lower side of this range. So again, for now, I'm being very careful. Yes, I'm considering maybe a bit of a bit of a further decline here. However, it may get halted near this 21-day EMA again. So that's why, guys, be very careful with that. We did get some good data today from from China. So we got the Chinese composite PMIs, manufacturing PMIs, and non-manufacturing PMIs, which all came out better than the previous and the forecast as well. So so yep, basically in a way, kind of the economy is kind of supported with good data, and this index here, you can see that yes, the initial spike we had, yes, it went higher, but then probably the whole corona vaccine issue is still kind of weighing in here. So for now, that's why I'm going to be very careful here. For now, I'm going to take a bit of a neutral stand here, but again, I'm considering that there could be a bit of a maybe a push lower here towards this 21-day EMA, but this is where I'll be very careful then. Now jumping into German DAX, and the index here is or I should say was let's put it this way, it did push higher on Friday. It did overcome it did create a new high for November. It hit the area somewhere around the 13,364 mark. So basically overshot this previous highest point of November near the 3,347 territory. And now looking at the cash index, and let me just jump into that one very quickly, guys. We can see that yes, it's also correcting a little bit lower. Now the price is back below that 13,300 zone. So in other words, guys, excuse me. In other words, there is also a possibility maybe to see a bit of a corrective move here to the downside, especially if the price remains below that 13,300 zone. If it does, then yep, we'll consider a possible move towards this short-term tentative upside support line taken from the low of the 13th of November. So again, guys, keep your eyes on that one. Could be quite interesting. We do have a bit of data today as well, so from across the world. I mean, from Europe we'll have the from UK we'll have the if I'm not mistaken here, the BOE consumer credit, but to be honest, not much, not very market driven economic data. Probably the main point here will be the ECB's Lagarde will give a speech, so that might be monitored, and yep, we'll see how DAX reacts to that as well. But again, let's be very careful. Probably DAX will remain more vulnerable to the whole kind of coronavirus vaccine issue. So yep, let's see how all that's going to play out. For now, like I said, if the price remains below that 13,300 zone, then yep, we might see this this little idea here working out, where we could see a bit of a correction lower here, and then maybe a nice rebound from this little short-term upside line. Now jumping into DXY, another index. Now this one is the dollar index, and yep, first of all, this idea worked out nicely. Of course, it took a bit of a few well, it took a while, however, nevertheless, it did work out. So the idea was that if we get a drop below the 92.24 territory, my next target is the 91.75 zone, and then of course I'll take it from there, because that area here, the 91.75, is the lowest point of September. We did get a slight drop below it now, however, the price still is hanging around here. So what I need to see in order to aim for some lower areas, I need to see a nice good strong move below this zone. So or should I say even better, the daily candle staying below this area, below this 91.75 territory, and then yep, we could consider a further move towards this 90.93 territory, which is marked by the intraday swing high here of is that the Let me just quickly 93. So that's going to be the 1993. That's going to be the inside swing high of the 28th of February of 2018, guys. So you can see that yes, we are at the moment at a very important level. Probably this highlighted area needs to go on that one. Let me just get rid of this one here, and probably let me just recycle this this highlighted area and drag it right here. So basically that's the area that we're going to be keeping an eye on, this 91.75 territory. If we get a daily candle staying below it, then yes, of course, in a way there it increases the chances for a further move lower. Now, quick update on gold here. Gold continues to slide, and this morning you can see that it drifted further south. It came close to testing the 1756 territory marked by the low of the 6th of July, or in other words, also the lowest point of July of this year. For now, I'm going to continue targeting that area because it's quite an important level to watch. So basically the lowest point of July near the 1756 territory, that's going to be my next target, where the commodity may end up kind of halting maybe for a little bit, and then maybe rebounding and traveling towards this downside line again. So this downside line is taken from the high of the 9th of November. In order to aim for some higher levels, we need to see a break of that area first. So, sorry, not this area, but the downside line. And of course, if we get also a push above, somewhere above this little territory, let me just put this one on the chart, the 1818 level here, and now that's where it could become a little bit more interesting for more buyers. So keep your eyes on that one, guys. But until then, as long as this downside line remains intact, yep, there is still a good chance for this commodity to drift lower. WTI oil. Now, this is where and what I was talking about last week, basically, that this steep upside line kind of remained intact up until Friday. This steep upside line is taken from the low of the 2nd of November, but as you can see, it got broken. So that's still okay for the bulls, because in a way, if this price kind of drops lower here but still gets halted somewhere near the 43.75 territory right here, marked by the highest point of August, and that still kind of could play out nicely for the bulls. And in a way, basically what I'm going to consider here is that if the commodity drifts lower, but yep, gets halted here, a nice rebound here could be possible, and a move back towards this 46.24 territory could be possible as well. So that's the current highest point of November. I mean, most likely it could stay that it could be that the this level will stay the highest point of November, but again, let's not jump ahead of ourselves. Let's wait for this day to finish, and then we can take it from there. In terms of the downside on this one, I would need to see a drop below the 43 territory, somewhere around here, in order to consider maybe slightly lower areas. I'm not saying a full move lower here, but just slightly lower areas. Bitcoin, so pushing higher, pushing back up here, back above this 17,252 territory. I talked about this on Friday, guys. Basically what I was saying, that if given that the this upside line remained kind of intact, if you want to aim for some upside again, then wait for at least a push back above the 17,252, which we got. This level also coincides with that 23.6% retracement on the Fibonacci. So first of all, let's get rid of the Fibonacci, no longer needed. Now the big question here is, can it actually, or should I say, how far can this crypto move north? Because at the moment, the next little obstacle is somewhere around this 18,945.50 zone, approximately around here, and then yep, we'll see what it wants to do after, because again, if it pushes above this area, yes, the next target is the highest point, the current highest point of November, near the 19,497, or we could then consider the all-time high near the 19,891 zone. So yep, let's keep an eye on this one. Let's see how this is going to play out. But yeah, for now, that's the game plan, guys. It's a little bit more to the upside. However, I'm keeping a close eye on this 18,950 zone, because if it provides resistance somehow, then we could see a bit of a rebound, a correction lower again. So that's why be very careful right now. AUDJPY. Now this is very tricky. We did get a move towards this 77.10 zone. I talked a lot about this area, and basically what I said, that in order to aim for higher levels, in order to get a little bit more excited with the upside, we need to see a push up of that 77.10 zone. As you can see, for now, it's a bit of a tricky one here, because the equity, cash equities, and in general the equity market is reversing back down a bit. So basically, people might get scared temporarily, and which means that some might start jumping into the yen or in other safe havens like the yen, yes, and the Swiss franc and gold. But with gold, it's a more of a difficult one, probably more yen and Swiss franc. For now, guys, basically with this here, the technical picture, of course, still indicates that there could be a possibility for a move higher. That's the reason why I'm saying that it's a bit of a tricky one here. However, I'll still stick to the same idea that I need to see a push above this 77.10 zone in order to aim for some higher levels. If it doesn't make this move here, then there is a good chance we could see maybe a bit of a correction here lower. However, not this level here, guys. I wanted to grab this line here, recycle it a little bit, and in a way, for now, that's what I'm going to be keeping an eye on here. This upside support line taken from the low, the 2nd of November. And if it gets broken, then yep, there is a possibility maybe to see this one moving lower, especially if the rate drops below the 75.76 territory. USDJPY, this one's another difficult one. Again, we are at a very interesting spot right now. Now, previously I talked about this idea where we could see maybe a nice rebound from this short-term upside support line taken from the low of the 9th of November. We still can, and there is still a possibility to see something like that. But again, given that the equity markets are a little declining a little bit, we will be very careful, because again, the yen buying might resume. This pair could drop below this upside line, and if it also moves below this little hurdle right here, the low of the 18th and the 23rd of November near the 103.65 mark, now that's where it could become very interesting for more sellers. So that's why be very careful for now, guys. Keep your eyes on this upside line, and let's see how all this is going to play out. GBPUSD, so another difficult one. I mean, there's a lot of problematic instruments, I would say, lately, because for now it's a little bit unclear. I mean, will the equities continue rising, or will they go for a bit of a correction? For now it's a little bit of a tricky one. We need some confirmation breaks first. But coming back to GBPUSD, yes, we dropped below the 1.3313 zone, but we didn't move below this 1.3287 territory. That's the reason why I've highlighted this whole area last week for you guys, because what I was saying previously, that if we get a drop below the 1.3313, yes, it could open the door towards further declines, but a further break below the 1.3287 zone could do the trick for more sellers, and we could see this one sliding further south. But at the moment, well, I mean, it did move lower here, but failed to move below the 1.3287 territory. So, well, let's keep an eye on this one, guys. I mean, if it drops below this, then yep, further declines are possible. But for me to consider the upside, now, first of all, I will get rid of these lines here, no longer needed. For the upside, well, I need to see a clear push above the 1.34 territory right here, and then yes, we could aim for some higher levels then. So keep your eyes on this one. It could be quite an interesting pair to trade, but let's wait for that confirmation break. GBPUSD, oh sorry, GBPNZD. So we've managed to break this highlighted area on Friday, so that's good news for the sellers. This 1.9060 level, I talked about this, and we also managed to break the lowest point of July. Or no, not this one, sorry, not this is the lowest point of July, and near the 1.9004 level, approximately around here. Or, you know, in a way you could round it up towards that psychological 190 zone. So we managed to drop below it. However, this morning we're pushing back above this area. So now keep your eyes on this pair today, because if it stays below that psychological 190 zone, then yes, further declines are possible. But if it doesn't, if it climbs back here, then of course we're risking to see a possible kind of move higher. However, for us to consider that idea, we would need to see a break of this downside line first. Now, I don't have a clear barrier here. Of course, one of the barriers is the 1.9317 territory right here, but I don't have a clear barrier right here. So what I'm going to do here is basically I need to see a break of this downside line and then a push above the 21-day EMA here, shown as the yellow line. If I see the daily candle remaining above both of these, wonderful, there could be a bit of upside here on this pair, but at the moment it's not the case. We're still below this downside line, so yep, still there is a chance for this pair to drift further south, given the fact that we also broke below that psychological 190 zone. And finally, EURUSD. So with this one is this pair is still pushing nicely to the upside. Today it's a little bit flat, or should I say at the moment it's a little bit flat. Let's see if that's going to change later on when Christine Lagarde starts talking. And of course, let's see how all this is going to play out. For now, I'm more bullish than bearish on this one, as I was last week. Basically, what I was saying last week, that if we get a push above this 1.1918 territory, then yes, higher levels could be met, and my next target could be that psychological 120 zone. So at the moment, we're on the right track. We could get what could happen in a way. We could get a test of that 1.20 zone. We could maybe even overshoot it and test the 1.2011 territory marked by the highest point of September, which could provide resistance. And if it does that, then yep, a nice correction back down could be possible. As you can see right now, I'm not really targeting much higher levels. For now, I'm just aiming for that 1.20 zone, or maybe 1.2011. And yeah, then we'll take it from there, guys, because it could be an interesting one right now. So let's see how this whole market is going to play out right now going into December. But at the moment, that's the technical picture, guys. Like I said, let's see how all this is going to play out. And yep, and then we can go from there further. So guys, I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate your time, guys. I really do. Thank you very much. And if you want to catch my video later on, my traders' tea time is always 14:15 GMT. For now, I hope you have a wonderful trading day, guys. Stay safe, most importantly, both health-wise and market-wise. And I'll see you later. Thank you very much, and bye-bye.